Let's take the discussion on market fundamentals forward with N Jayakumar, who's joining us today on my show from Prime Securities. Jake's afternoon, and thank you so much for your time. It's a good day to, be having this conversation. We are just knocking 1.6% or 1.5% away from all-time high on the Nifty, and Bank Nifty has already taken it out after 18 months of consolidation. Sitting now, looking at the environment, analyzing the elements, how does the setup look to you?
Good afternoon, and thank you for having me on your show. I think if you look at whether it's geopolitics or it's the entire theme of China plus one, or it is this thing about moving sort of manufacturing exports, moving manufacturing into India. Look at a whole host of themes. I think whichever way you see it, and most importantly, geopolitics, politics more recently, I think we've realized that even during a situation where the war in Ukraine continues, India is able to procure raw materials while the rest of the, especially oil, for instance, so much cheaper than most other countries in the world. India and China, for instance, have bilateral arrangements, some even in rupee trade, to be able to procure their supplies of oil. So as I see it right now, with every passing adversity in the world, and more importantly, with every talk of higher interest rates, inflation related issues, etc., India seems to be holding its own, coming out significantly superior to what many expected, and more importantly, the whole world is kind of gravitating towards, in some form or the other. And I say this with guarded caution because you can't be complacent about this, but the reality is that people are finding India impossible to ignore. And I think that's a pretty telling statement of the way things are as we speak.
Jakes, what are your thoughts on flows? Because you do move around in the circles, the global asset allocators, and travel across. What is the sense you're getting? This massive flow which you've started, do they appear a little sustainable?
A lot of these flows actually were monies that were invested in India, which had moved out tactically to move to markets like China, for instance. And these flows have, obviously, the Chinese opening has not been at all promising. Somewhere along the line, I think the world demographics are catching up. The fact that many of these markets have populations that are significantly older than in India means that even when stimulus is given, consumption doesn't take off. And that's something that China is seeing right now. Whether they're already well taken care of on infrastructure and therefore any added thrust is not making a difference, but certainly consumption is not taking off. And from that point of view, a lot of those capacities and the play that people took on those markets based on the opening up trade seem to have not worked out, and therefore those monies are finding their way back to a market at significantly higher levels than when they exited. So from that point of view, I think a lot of this money is actually allocation money that's coming back, number one. Number two, FDI flows into India have never been stronger. The startup economy continues to, albeit on a selective basis, keep getting its fair share of funding. So take whichever metric that you might. The reality is that I think these flows are there. People have been ideally looking for the long only funds, have been looking for dips to buy into, but the sort of hotter or the thematic money which moves around based on tactical trades which they piggyback on, those have actually also turned positive for India. So for the moment, while we may be close to all-time highs, I think there's nothing that says which remotely can disturb this, at least not visible to the naked eye. And therefore, if we were to make new highs, it wouldn't surprise me. So the stock of sell in May and go away, which a lot of people have been advocating, I think may not necessarily come true. In fact, I believe that into June, July, and into the next quarter, you will see selectively a lot more money coming into the Indian markets.
Jakes, while the benchmarks are closer to or breaking away in a new high, the broader markets are far away. Small cap, in fact, the index is 14-15% yet to claw back to that levels. What are your thoughts on broader markets right now in terms of valuations?
I think there's money that's going to come into all sectors, and I think we see performance A lot of mid caps are hitting new highs. A lot of sectors have underperformers and underowned players who are hitting new highs. It's only where complete flow related money has been there, where till recently there was massive selling, that some of the index heavyweights didn't participate. And when that selling is actually turned into buying, you have index heavyweights also participating, which is why the index movement is there. But there's no doubt about it, at the grassroots level, the small and mid caps are seeing a clear move of money into these markets.
Right. Let's come
and that will continue to remain.
Capital goods and manufacturing is one space you've been quite bullish about. But if we break that into and look at some of the large cap appear to be a little higher on their valuation range. What are your thoughts on this argument? Or you think one should look at more mid cap kind of engineering capital goods now that after this run up has happened?
When you take capital goods, you also take not just power and power equipment guys. I think they will that sector is dominated by a number of multinational players who will continue to remain expensive. The likes of Siemens and the likes of as I said, Siemens, ABB, etc. But if you take some of the Indian equivalents, I think they are available cheap. In the PSU space, one or two names are there that they haven't performed in recent times. But with the flood of orders, I think some of the PSU capital goods could also be interesting bets. Defense is a big play which continues to get orders. And that as a separate theme has been firing along in any case. Other than that, the way I would look at it is that those linked to the capital goods space, things like hydraulics, things like, manufacturing exports, where people have been moving manufacturing facilities into India, where people have moved capacities from Taiwan and China into India. Those kind of spaces I see developing a lot more action. Valuations are lower because they are as yet ignored, or these are not larger companies. And related to this also is the entire CapEx theme which is developing. And there, to the extent of the integrated steel players, especially those who are low on leverage, are those we really like.
Jake, we also spoke about some of the infrastructure plays which are trying to restructure and get back to the scale. Are you still bullish on infrastructure related themes? Any thoughts there? Any themes within them which you're liking?
In the past, infrastructure has been beset by payments not coming, state governments not paying in time, funding not being available. A lot of that has actually been eliminated because companies have consolidated. And in a space where so few companies, like in the EPC space, when you say EPC, you're talking about maybe L&T, maybe BHEL, maybe, and then you are struggling to get a third or a fourth player in. And some of the names now on the EPC space, especially to do with the balance of power, balance of plant kind of situations, you find one or two names, but many of them, because they're either consolidated or a number of EPC players who have actually fallen by the wayside and shut shop. So any industry that's gone through consolidation of this kind, the survivors end up commanding a premium. And I think those are interesting spaces to look at.
PLI and manufacturing also is going beyond the traditional capital goods. They're talking about electronics manufacturing, chemicals, many others. Anything which you are studying closely there?
We like the PLI, one or two plays that exist in the pharma space, which coincidentally in the name, and I don't want to talk specific names, in the names that we track, in that one specific name, there's a big PLI play domestically for Pen-G, and internationally they're also one of the largest generic players in the US. If you see the pharma space, and that is one space we are supremely bullish on, it is again, a lot of the smaller companies have actually fallen by the wayside in the US markets. The US markets are facing probably their most acute shortage of drugs, especially on the generic side. So generics players, with pricing pressures having eased, the environment having become more benign, and some of the larger players from India, the top 2-3 players, I think will be massively benefited into the next few quarters, because either, as I said, the pricing pressures are down, logistics and supply chain costs are down, and more importantly, some of them have an interesting PLI play as well in India, where their raw material, they're able to lock up raw materials for their end products through the PLI scheme, and the government also pays you back over a 5-year period. So I think pharma will go through a tremendous re-rating, also because some of the allocation to the export-oriented dollar economy, if you will, of the tech sector. People have been lightening up there, and they've been wanting an option to get back the dollar exposure, and pharma provides exactly that theme. So I think pharma, specifically one or two names, we are extremely bullish.
One last question to you is from the unlisted space. I know you look at that. A lot of family office money, big HNI in our country is looking at that. Apart from traditional VCP kind of people, what themes are you following, researching, and studying right now from the unlisted side, Jakes?
I think it's usually ground up stock, stock specific. I think there's theme on packaged foods, which is pretty interesting. Number one, that themes, if you just see the, should I say, the shop, or the shop windows, or you go to some of these grocery stores and the kind of shelf space taken up by packaged foods, that's a big play in India. The second theme we talk about is gaming and real money gaming, fantasy gaming. That's something that is growing, and especially with the popularity of the IPL, etc. That space is just exploding into seeing new players and, more importantly, new money. That's the second one. Then, of course, there are the traditional ones like EV, specific EV component manufacturers, etc. That could be another one. And then retail distribution in the space to do with let's say small villages deep in the interiors of India. That's another space which we've raised money for 2-3 companies. And the other one, which is our niche companies, which are in, let's say, one specific case, which is in treasury software and supply chain software. Basically, treasury management systems and ERPs specifically meant for far more flexible, far more nimble, not the usual heavy investment SAP oriented companies which are in that space. We've raised money for one or two.
All right, Jakes, thank you very much for joining us today. Always great getting your thoughts on our show. In fact,